Today we're going to be looking at the plant, property and equipment note that goes into the statement of financial position. Here's an example from your textbooks for Webster's Welding. They give you a whole heap of information. They ask you to do the balance day adjustments. The note, though, that goes in the statement of position is slightly different now and extended for level 2. So as last year at level 1, we still have the appropriate plant, property and equipment items, and this as per last year with their cost, take away their accumulated depreciation, giving you the carrying amount. That's as the note per last year. At level 2 now, they require you to extend that note, so then you have this part on top, which then comes to the same figures as below, the carrying amount as at the end of the year, as gets reported in the statement of financial position. But this also then does a year's review. So it basically gives you the movement of your fixed assets at their carrying amounts from the opening carrying amounts at the beginning of the year to where they are the carrying amounts at the end of the year. So this is added information you have to put in. Just be very wary therefore that you're still working to the same figures as before. So the easiest way to do it is to do the actual carrying amounts and then work towards these figures, but sometimes in exam papers they don't make it that easy to do it like that. Just look at this note here. Sometimes they will give you the opening carrying amounts. Basically, therefore, you have to look at there and say, right, so if I've got an asset, for example, in this case, my plant and machinery, I know that my carrying amount at the end of the year is going to be 52,800 because I've worked it out that way. Your movements during the year, in this case, there would be any additions. And remember, this section of the note, we're always working at carrying amounts to the business. So what the business is claiming the asset is worth to them. So in this case here, if I'm adding any sorts of plant and machinery assets into this account, they will come in at the carrying amount to the business. And if, of course, they're new additions, that will be their cost less GST. Remember, GST exclusive figures only here. GST gets dealt with elsewhere. And in this case here, for example, I've got my opening carrying amount. I've got my additions. I obviously bought some equipment. That's its cost less GST. Disposals, if I've sold any assets, some equipment assets in this case, this will be taken out at their carrying amount, i.e. at what I'm reporting them to be, the value of them. And of course, obviously, depreciation is the big shift in what your opening carrying amount is to what your end of year carrying amount is. That's how much you've written off of that carrying amounts of the assets during the year. So let's just have a quick look at this here. So for example, it tells you how to work out your depreciation. You put in your depreciation charges and adjust your accumulated depreciation values accordingly. It also will give you some other information here. For example, it's sold some equipment, so we know we're talking about the equipment items, and it says the equipment was originally purchased for that, accumulated that, therefore a carrying value. That's the information we need, because I'm reporting that I have got that equipment in at $1,000. So if I'm disposing of it, it comes out at $1,000, and that's that movement there. And it also therefore says that if I've purchased new equipment including GST, remember it goes as an addition at the cost, and there it is, less GST. And there we go, Webster's Welding equipment had a carrying amount. I'm not really, that tells me what my opening carrying amount is, so they've given us that figure. And therefore, if you add your opening carrying amount plus your additions, take away the value of the equipment that you dispose at carrying value, then take off the amount of that you've written off this year, or those you've written off this year, is your depreciation, which you'll have worked out from there. And therefore, that should give you your closing carrying amount. And I know that one works, for example, because I've got my cost of my equipment asset, which is up there, 24,000. And down here it says I would have done my adjustment and adjusted my accumulated depreciation figure. So I'm saying overall, as at that date, that would be my carrying value of my equipment. Just a quick note here, look at land. Land here, remember, no, at level 2, no depreciation on land. So it just carries it's the only change you would have here if you had additions or disposals of lands. You don't have to worry about the carrying value of that because it isn't depreciated. Okay, next video we're going to do a question from 2014 paper.